Canada might be one of the worst performing countries when it comes to economic growth. And I'm going to talk about it in today's article, which is titled, Canada Sees Domestic and Foreign Investors Pull Out at Record Pace. Now, we discussed a couple of times on this channel about Canada. We discussed that, they've been facing a lot of problems with their real estate market stagnating here because of higher rates, higher mortgage rates, and so on, right? We have a problem with also the increase in population that was supposed to bring productivity, but there's no strong productivity. The productivity is quite weak, especially when you have students that are coming in and still are learning or going through the school system and are taking time to find a career. There's also problems with a lot of employers trying to find the right candidate for filling roles that require specific skill sets that may not be filled right away, especially as the inflow of population comes in, and this population still needs to be skilled in order to take on these jobs. There's also problems with the debt levels that the country has, the debt to GDP, the amount of private debt, the public debt, which is at staggering levels, the amount of debt that people take out to buy real estate, the amount of debt that was taken during COVID time, the fraud that was done, soft fraud, as some people say, in order to get, a home, in order to get their foot in the door, that many of the banks or institutions or mortgage agents did. The amount of FOMO that was created by realtors out there, the amount of money printing that was conducted also during COVID time that really escalated the asset prices out there and for people to over lever. Now all of a sudden we have a hard stop here with high interest rates that even if they do some cuts here and there, it's not going to solve the problem because inflation still needs to come down lower and those rates are still going to be higher than what they were back in COVID time. So we can, even if we do get 100 basis points of cuts, it's still going to create elevated pressure for the consumer. And let's not forget also the taxes that continue to come in. Capital gains tax, increase there, continue to eat up returns for investors. So what's the point of investing in Canada? Trying to make some gains there, right? And also, let's not forget about the other taxes out there. The carbon tax that makes it much harder for corporations, individuals, and if the corporations are going to feel the pain, then guess what? They're going to pass it on to the individuals as well. So all in all, when you put it all together, the productivity issue, not much productivity in the country. You've got a tax issue. The tax continues to go up. The debt levels that are high. The government, the Canadian government coming out and discussing that they're now backing up bonds, mortgage bonds, and 75% of their spending is going towards supporting the mortgage market. That's not their job. That's the Bank of Canada's job to print money and support the banking system. And when you got the fiscal side of things, the government side of things, continuing to spend like a drunken sailor, continuing to pump money to try to save the economy, but the economy's not budging, and you got investors fleeing, taking money out from the country because they just simply don't see the country prospering in short to medium term, maybe even long term. That creates more damages for the country. And we see that right now. As I was explaining in this article, I'll link it in the description so you could read up on it as well. Comes out from betterdwelling.com, says Canada sees domestic and foreign investors pull out at record pace. Makes sense. Look at the Toronto Stock Exchange. It's been in range mode for 2 years. It's back to the March 2022 highs just now. So it goes on to say Canada has historically had a reputation as a safe haven to global investors, but those days are suddenly gone. Statistics Canada released its securities trade for February. The data revealed global capital continues to flee the country's capital markets at a record pace. Even worse, domestic investors are now joining them. So foreign investors are very important for Canada, right? It's what was also supporting the real estate market the past decade, right? Huge craze in Canada, Toronto, Vancouver, and so on of the real estate market. If you just see how things have played out, you had a lot of foreign investors investing in that market, causing the property prices to really skyrocket, right? And foreign investors, in terms of the real estate market, the mortgage bonds out there, Canada's ability to offset its debt, foreign investors are very important because without them, they can't really offset that debt, which means that the government will have to go out and either tax more, which they're doing right now, as many people are feeling the pain, are very angry about, or they'll have to raise more debt, which is going to end off being a very bad thing down the road, especially if something breaks, right? How long can you kick the can down the road over and over and over and over and over again? So here we go. In the article, it says Canadian investors flee to foreign securities, sets record for bonds. So obviously, what we can tell from just that line there, that foreign investors and also domestic investors living in Canada are seeing opportunities in the bond market because they're getting an attractive yield. And what attractive yield, what bond market? Obviously, it's the U.S. bond market, right? So you're seeing money flow into out of Canada into the U.S. government bonds, and because we're seeing those yields, and we're seeing the Federal Reserve in the U.S. continue to be hawkish and continue to kind of roll back and kind of push the idea of rate cuts further out, meaning that those bond yields, the government U.S. bond yields, are moving up because of that. And again, it poses a good opportunity for investors because, one, those bonds are very safe, backed up by the U.S. government, and second, there's an attractive yield, right? So could you invest in Canadian bonds? Yes, there are some investors that are investing, but again, as this article states, that money's flowing out of Canada into foreign securities, foreign bonds, U.S. bonds, because they just simply tend to be more attractive, more safer, and how things are playing out in the U.S. looks like, if you look at the growth, it continues to be strong. The economy continues to be resilient. The economy continues to continue further higher and higher, getting better, right? Versus, let's just say, Canada's, there's a lot of uncertainty, right? You would be worried. You would be scared, especially at the level of borrowing that the Canadian government is doing and the amount of money that's being pulled out from the country, right? So Canadians weren't leading the trend, but joining global capital flight from the country. Okay, so the Canadians weren't the first one to lead the trend. It was the foreign investors. And foreign investors are, like I said, very big for Canada. Foreign investors dumped $8.8 billion worth of securities in February. This follows an unusually busy period of divestment over the 3 months, amounting to $31 billion sell-off. Okay. In addition, foreign investors reduced unprecedented amount of government paper. They reduced holdings by $15.1 billion in February. It broke down to $11.8 billion in federal and $3.3 billion in provincial paper. This follows a record $15.5 billion off private paper in January. The one highlight was Canadian corporate bonds, which saw a mild bounce Foreign investors scooped up 13.3 billion in February, the highest amount haul in a year. The catch is they were led by US dollar denominated bonds issued by Canadian banks. Strong indicator that investors see weaker loonie in our future, right? So another problem, right? Not only you have foreign investors pulling money out, but as they liquidate and sell their Canadian bonds, Canadian securities, and what have you, that's causing also the bond yields to move up higher, which is related and has some relation to your loans that you have out there, that the consumers have out there, right? Those long-term loans, aka those mortgage rates, right? So if you get foreign investors selling those bonds, right, that's in a way creating also tightening for the country even further, because those yields are moving up higher, making it worse off for real estate investors and for anyone who have a variable rate or a mortgage that is tied to this variable rate. So not only they're pulling money out, right, they're putting it into bonds that are US dollar denominated. So even though there was some inflow, a little bit of a bounce in corporate bonds, but there's also another important point here is that they feel the loonies in trouble, which I can definitely see coming as well, right? We could see Bank of Canada cut rates first in comparison to the Fed. That's possible. But what that will do is it will cause the loonie to depreciate, the Canadian dollar, the currency to depreciate. And since the Fed is continuing with its higher for longer narrative, you can see already there's strength in the US dollar. So you're seeing foreign investors parking money in US dollars because, again, they're worried that the loonie will depreciate, and it could depreciate significantly, especially if this crisis really blows up and gets worse off. Then definitely there will be aggressive rate cuts, money printing, so on. Who knows what else? And that will cause the loonie to completely tank, right? And we're seeing that already, right? We're seeing the weakness in the economy, the GDP, the growth numbers, the jobs numbers in Canada. In comparison to the US, it's been more strong and resilient. So I'll leave off with this last paragraph here. I think it's a very important paragraph for you guys to listen up on. So it says that the latest update shows a disturbing trend that's emerging. Canada struggles to attract capital sufficient to offset its debt. So those foreign investors that's been providing capital to offset its debt is hence why we're seeing now the Canadian government getting involved. What do I mean by this? I'll tell you in a second. A hyper focus on housing is concentrating its economy in just one area. I mean, what does Canada have? I mean, there are natural resources around which, if the government's competent enough, they could do something about it and create a revenue stream from it. But they're not. Thus, really the economy is real estate here, I guess. It's even gotten to a point where its government is borrowing money. Like I said in this video, it's borrowing money to buy a mortgage bond it guarantees. It's like using a payday loan to pay off your credit card. It might work, but there's a reason moves like this aren't outside of a crisis. So you're borrowing money to basically create and back up another loan out there. So it's a debt that's basically backed up by another piece of debt. And they're doing that because, again, like I said, why are they doing that? I mean, it's not their job to do that. They're doing that because foreign investors are no longer interested. And they're trying to get interest in it by saying, we will guarantee these mortgage bonds. And to guarantee them, and we will, flow money into that, we will issue these government bonds that will back up the mortgage bonds. Ta-da! Right? Great short-term plan. But if the economy and the markets and inflation and interest rates stay where they are for some time, I wonder how long they could kick this can down the road. How long could they play this game for? Things aren't projected to get better off for the country. The OECD previously forecast Canada's addiction to debt, both public and private, will make it the slowest economic growth for any advanced economy for decades. So even if there's nothing crazy that's going to happen, no crazy recession, no black swan event, you can expect, even according to the OECD, that growth in Canada will probably be the slowest. And I truly agree with that. Because why would you pour money into Canada when there's other better investments out there? But real estate, right? What about that one, Daniel? Well, yes, but if rates continue to be high and where they are, that's going to cap real estate. That's going to cap real estate. Rates are not coming down. They're not coming back down to the COVID level until there is a massive crisis, a black swan event. Then you could be talking about, okay, they're going to cut rates aggressively and possibly real estate to move up higher. Hopefully that crisis is not that the whole residential real estate market in Canada just implodes, right? More recently, the latest update from the Bank of Canada forecasts the country will underperform the global economic boom. Okay? This is Bank of Canada telling you, all right? Forget the OECD. Forget me. Forget this article. Bank of Canada is coming and telling you now. Hello, wake up. Hello, knock knock. The economic boom is likely to be, we will likely to underperform. I'll read it again. Bank of Canada forecasts the country will underperform the global economic boom. So whenever there's going to be an economic boom, there's cycles up, down, get a crash, recession, and then the next economic boom, Canada's likely to underperform it. From Bank of Canada. So an issue complicated even further by the fact Canada's population will overperform when it comes to population growth. So it will continue to see increase in population, but that will truly erode the economic growth, because as you've seen, the productivity is not up there, right? It's not up to that standard. It's going to take time for students to study, figure out, find a job, right? Maybe even if you look at what's happening in Canada, there's a lot of these diploma mills, right? Which are just turning out students into skill sets that are not needed in the market, or maybe there's more education that's needed further on, right? Many students may come just for the sake of maybe getting a PR, right? There's many reasons for it, and we've seen examples like this in the past and also currently with other countries out there. We've also seen this with Germany having an issue because of bringing in this population, but the productivity was an issue because the skill set's not matching, right? So, and how would it match, right? How would it be easy for students to thrive and help the country when, one, it's very expensive to find housing in the country, right? Especially if you're a student, right? You're not making money, you're just there to learn. Housing is very expensive. Taxes are high. Cost and prices and cost of goods and groceries and for services, very high as well, right? On top of that, the education fees, they're high as well, right? So what are you going to do? You're going to opt for maybe an alternative school that, again, is not going to meet your criteria. And then if you're not meeting your criteria then what are you going to do? And you're seeing that after all of this, that you're not landing a job because the market's tight. You're either going to bounce to another province or maybe just completely leave the country itself, right? So a lot of risks ahead for Canada as a whole. There's a lot of reasons. We talked about it previously, countlessly times on this channel, many videos about it. This video kind of summarizes most of it. And yeah, it doesn't look like I'll leave off one thing. Even if there's no decline in Canada, you can expect, like in previous years, where the growth is just stagnant. You can just get range mode for 5-10 years, and you'll get a bunch of people out there on TikTok when rates start to come down. Price is going to skyrocket, real estate to the moon, and so on. And people jump in, buy some properties, you get an uptick, and then for the rest of 5 to 10 years, sideways action, right? Maybe down and so on. That's with the mindset that there's no black swan event or massive crash, right? Just we've avoided that massive crash or recession. So anyways, those are my thoughts. That's what the article says. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, the bell icon to be notified in the next video, and I'll see you guys around. Cheers. Bye.